Welcome everyone to the first episode in this series of videos from the Forex Beginners course. In this video, we're going to be teaching you how to use MT4, MetaTrader 4. We're going to be teaching you everything, the basics, from executing to closing a trade, changing your stop loss, configuring the charts, adding quotes, and so on. So right away, on the screen here, we can see three things: the balance, equity, and free margin. The balance is basically the amount of money that you have available in your account. The equity is the sum of your open trades plus your balance. So let's say you have one trade open and it's positive $1,000, then your equity will be $101,000. So it's the open trade plus your balance. The free margin is basically the amount of money that you have left to open more trades. And as long as you open a trade, then you'll also see something called your margin percentage, which is basically giving you a percentage of how much money you still have left to trade and how much of your money this trade is using up. So that's your margin percentage. If you look at the bottom of the screen, the bottom left, there are like two arrows there. We can click there and we head to our quotes. Now, the quotes are simply the currency pairs or commodities, stocks, cryptocurrency, whatever it is that you will be trading. So this is just an easy way to, locate them and select whichever one. To select a quote, you simply tap on it and you can either open charts or select new order. So symbol properties and simple view mode, they're really not options we use. In order to just trade, you select new order. In order to analyze the charts, you select open chart. If, let's say, maybe you would like to trade something that isn't here, I don't know, GBP USD, to add a quote, you simply tap on the top right of the screen, the plus sign, and that will take you to the rest of instruments that your broker offers. For the broker I use, Hot Forex, they offer a wide range of things to trade. All right, so here we can see Forex, and in Forex we would find GBP USD, or GBP USD is already added. All right, we have GBP AUD. It's right here. So in order to add it to our quotes, we simply tap on it, GBP AUD, and it's added. If we needed to add GBP CAD, then we simply tap and that's added to our home screen. For any symbol or anything, even gold, you have gold versus the euro. I already have gold versus the US dollar on my home screen there in quotes. You can trade crypto, commodities, bonds, oil. It really depends on your broker. So after you've selected the quote that you would like to trade, you come here on the home screen and you simply scroll down to the bottom and you will see it located at the bottom there. You can tap on it. You can just tap on any of the selected quotes. Let's say we wanted to look at gold. Gold is XAU USD. So let's say we wanted to. And we simply open the charts. It's that easy to get the charts. If you are at the quotes at the bottom here, you can simply tap on the symbol directly next to the quotes and it'll take you back to the most recent chart. So like that. For your charts, it might look a little bit different. I'll explain how we edit and customize the charts a little bit later in the video. So now that we're here in charts, we can see the price of the pair we've selected. I've selected gold, XAU gold against the US dollar, USD. And we can see the price of the pair represented as candles. Quick note, bullish or upward movement is represented by white candles, and bearish or downward movement is represented by black candles. Very important to note. Bullish is just another term for, candles moving up. If you've recently downloaded the app or this is your first time using the app, then your candles may look a bit different than mine. It might just look white and black. I'll show you how to configure them a little bit later on in the video, but it's just, important to note that your price movement of whatever it is, this is the actual price movement of gold throughout history, or recorded history, I should say. And it's, represented by the candles. So we're able to analyze these candles, these exact price movements, and it helps us to make a calculated prediction, so we can know which direction the market is going to go and so on. So just a quick note there. So to the right of the chart, where we can see different price markings, and the cross located at the top of the screen can be used to mark up specific prices. All right, so this cross that is located in the center of the screen here at the top, you just tap on it and you are able to move the line up and down to a specific price marking that you may want to be able to input when you're placing a trade, or maybe put your take profit or stop loss. So this is just to give you a direct marking. And when you use this tool, you'll notice that at the bottom of the page as well, as you move the different as you move through from left to right, you'll see the different date and time when the candle occurred. So just another important note. All right, and when we tap on the screen, we can see this wheel that pops up. Now I'll explain everything on this wheel, but generally the M1, M5, M15, H1, D1, week 1, W1, MN, these are the different time frames. So what that means is, let's say for example I tap on M1, that is saying that each one of these candles represent 1 minute. This is how fast it actually moves on the M1. And if we tap on M15, then it means 15 of those M1 candles make up one of these 15-minute candles, and so on and so on. So we go to the half an hour, 2 of those 15 minutes make up one of this, 2 of these half an hour make up the 1 hour, and so on and so on. So we're able to see the price movement of the exact pair represented on different time frames by the same candles. It's just like if you come out on the daily chart, for example, right, all of the movement between the M1s and the M15s and the H1s and the H4s for the day is recorded in this little green candle right there. All of the movements is just recorded right there. So the time frames give you different perspectives. The larger time frames can give you a full picture or overall view of the market direction, and the smaller time frames can give you a sense of what's going on in depth or behind the scenes. Price action or candlestick formations may actually occur. You may see certain different formations when you use smaller time frames, or you might even be able to scalp or trade with faster movements on a smaller time frame. And for someone who doesn't have the time to dedicate or be there at the charts every day or every minute of the day, you can use a larger time frame so that you can have that freedom and have slower movements, but it'll happen between the day. So that's just a little bit explanation for the use of the different time frames and what they actually mean. So now going back to the wheel, we can see a little F-like symbol. We can tap on the F-like symbol, And this is basically where we add indicators or any moving averages. The strategy I use does not incorporate the use of any indicators or moving averages, but there might be, you know, strategies out there where it is kind of dependent on a moving average or indicator, and it's something a little bit technical that deserves an entire video. If somebody is interested in getting into that, perfectly fine by me, but it's not the strategy that I use. It's just thought that I could show you where you go to add indicators. All right, and we can see the cursor located here. We can select it and basically do the same thing as the top. And the final symbol on there is the shapes. So we use these shapes or trend lines to mark up our zones. You remember I said the price movement is represented by these candles. So we can look at these candles, the shape, the history of the candles, and sort of be able to make a calculated prediction based on our analysis of the history. So we use these symbols and lines to help give us, what can I say, a little bit more precision in our decision making. So they help us visually see, you know, zones and targets. So in here I have some trend lines there already, but to add a trend line, your list might be empty. But to add one, you simply tap on the plus at the top right, and here you see the list of different lines, channels, Fibonacci. There's a lot of stuff here, the shapes as well. But you have, generally we use horizontal lines to mark up support or resistance. I will explain what support and resistance means a little bit later, but the general idea is that a support or resistance zone is just a zone that you mark up, like just to give you a visual representation of where price might react in the future. So we have trend lines. Trend lines help give you a sense of market direction and in sense of where market might go to next as well, if it rebounds, if it breaks out, you know, reverse, and so on. So we have there are strategies that use or require Fibonacci, for example. I wouldn't be touching too deep on Fibonacci for this beginner course, but just know these are tools that you also use in order to analyze the market. It's not completely necessary, but they're given to you. And the rectangles also, you know, are used to mark up visual zones. For example, a breakout zone, maybe your target zone. It might be used to mark up resistance or support as well, just to give you a more precise visual representation, because you can identify support or resistance zones after I give you the general definition of them. You could just look on any chart and be like, okay, this is a support, this is a resistance zone automatically. But these tools help us not only just identify them, but we can mark them up, and you know, we can use them to make more precise decisions when it comes to our trading and have more precise entries and exits. I probably should show you how to use it as well. So let me just, for example, a trend line. A trend line, we simply tap there and we extend it out like that, or maybe like that. Just giving you an example of, you know, the use of trend lines and so on. And the shape, maybe a rectangle. We maybe have a zone like here. Just to give you an example of how to actually apply these tools to the chart. This is not how we use them. I will get into how we actually apply these tools, but this is just, you know, the how-to. I think that would be, let me a horizontal line, for example. Yes. Yeah. So yeah, that's basically the idea. Let me try to clean up the charts. To delete, we just go to the top right and most recent. Yeah. All right, so I've already told you that the use of these tools, the horizontal lines, trend lines, zones, the triangles, whatever it is, they're just to help us decide whether the market is going to go up or down, so that we'll know whether to buy or sell. And after deciding which direction you think the market will go, then it's time to place a trade. And to do so, you simply click on the top right corner of the screen, the little like page with a plus sign in it, and tap on that. Now, on this page, we can see the difference between the buying and selling price. This is calculated as spread, and it simply means the difference where if I open a sell order, the red line would have to reach where the blue line before I become profitable. If I open a buy order, the blue line would have to reach where the red line is before I become profitable. Real simple. At the bottom of the screen, you'll see sell by market and buy by market. This is simply put how we buy or sell. You tap buy to buy, you tap sell to sell. Not much explaining needed there, I suppose. At the top of the screen, however, you'll see a drop down. If we tap on it, you'll see buy limit, sell limit, buy stop, sell stop. These are pending orders, meaning if you select one of these orders, it wouldn't be open immediately. It's like you're trying to tell the app, if price reaches this level, then do this. Like, for example, the price is at 1951, roughly. If I open a buy stop, which is a continuation pending order, that would mean if price reaches 1960 from 1951, then open a buy. If I place a sell limit order, I can put that at 1960, and that's saying if price reached at 1960, open a sell. So that's different. That's the difference between the pending order, and in the opposite direction, buy limit would be below the price, something like 1940. If price reached there, then open a buy, or a sell stop, which is the continuation in the direction. If price reached 1940, open a sell. So that's just the different types of pending orders. You won't necessarily need to use pending orders when you now get into it. For the most part, we'll just be using the bottom buy and sell by market. So you analyze the charts, you identify your entry point. For scalpers, then you'll mostly be buying by market order. For day traders or swing traders, meaning, those who might want to take it a little bit slower, not the smaller time frames, but the larger time frames, then you might in the future need to get accustomed to using pending orders, because your analysis might not give you an entry that is close for you to open it, immediately. You might need to put a pending order to get a good entry and an exit, depending on your strategy. So generally, we use this to buy and sell by market order. Now, below market execution, we can see a line there, right in the center there. This is where we edit to change our lot size. And the lot size is basically the size of the order that you would like to place. So at 0.01, it's saying for every pip, and pip is just the smallest movement on the chart. So for every pip, you gain or lose 10 cents with 0.01 lot size. And if I were to maybe put 0.10 instead, then this is saying for every pip I would like to gain or lose $1. And the larger you increase it, the larger the size of your trades. However, it is recommended to only risk 2% of your overall balance per every trade. The reason being proper risk management. I'll get into what proper risk management means, but it's generally the way we safeguard our accounts. We are not gambling. We are using analysis to give us a statistical advantage. So we treat it like a business. We're not just risking 50% of our account. We're not looking to double accounts or make $1 million in a week or even a month. However, as long as you stick to your strategy, then you can see consistent profits and you will become a successful trader. As long as you practice, among many other important things, proper risk management. And that is only risking about 2%, and some strategies might allow you to risk up to 5% of your entire balance per trade, but it's generally advised to only risk 2%. All right, to log into your account that you've created with whichever broker you use, the broker I use is Hot Forex. I'll include a link along with the videos, so you can create your account. It's very easy. You can just provide your email, name, and fill up the information there. They'll send you a confirmation email and you can create your trading account. Side note, in order to actually trade, the only documents that you will need are your ID, proof of address, and your method of depositing and withdrawal, whether it's a Visa or a MasterCard from your local bank, or cryptocurrency, PayPal, Skrill, whatever the case may be. After you've created your account with the broker, however, to log in to the account, you simply tap on the top left of your screen where it says manage account, and under manage account, to add a new account, you simply tap on the plus in the top right of the screen, and here you can log into your account. It is recommended to create a demo account with a broker so you can track your records. So you use a demo account to practice and develop your strategy, or if you maybe have a strategy from someone or access to a strategy when it comes to Forex, or even back testing your own strategy, just going back in the history and seeing how the price moves, identifying certain chart patterns or candlestick formations and getting to know the charts and practice and back test a strategy. When using a broker, you're able to see the actual results of your trading. So you can have a demo account without a broker. When you download the app, that's just a demo account. But the benefit of having it with a broker is actually being able to see any progress that you're making, your wins against your losses, what time of day do you trade, what time of day do you make the most profits, when it's best to trade, what pair you lose the most on or what pair you win the most on. They're different bits of information that a broker would provide you with that would be important in developing your strategy, because learning from your mistakes can only improve the strategy. So in order to log into your broker account, you simply select log into an existing account, and in here you can locate your server. Now when creating a demo account with the broker, they will provide you with all the information you need: your server name, the login ID, and your password. You simply select or input the server, you search for the server, you copy the login ID and the password, and you sign in. So it's as easy as that. Alright, and that's it for this first video. I hope it was helpful, and I'll catch you in the next one.